Now, as we head into the overnight session and tomorrow, on the downside, we are now again going to be running into some better support. So you can see we have, the support at 36.94 to 98. That's a pretty good spot. 37.06 quarter is not bad, but we've now overextended ourselves into yet another larger time frame high volume node, or very close to it, where buyers can be active. And typically, when you get this wide of a range on the day, the next day is not going to be quite as crazy. That's not to say that the market can't go lower, but typically when you get this wide of a range, the range of the next day compared to this one is not going to be as wide. Now, it'll still be, I think, a reasonably wide range day, but just compared to this, it won't be as wide, right? So it might be like half of this or less than half of this. But at this point, the short-term bias is going to be bearish. The intermediate will be neutral bearish, and the bigger picture is kind of still actually leaning on the bullish side, right? If we look at a larger time frame chart, we can see that the larger kind of uptrend and the pattern of balanced breakouts, it still has potential to remain in play. So the bigger picture will still be bullish, or it can be kind of taken down a notch, perhaps to neutral bullish. But the short term is going to favor sellers. The intermediate is going to be neutral bearish. The only thing is that because the market has moved so much and so quickly, we can still get that theme of bounces off overextensions into support, and then we have to wait for the bounce to actually short the market. We don't want to get overly aggressive on the short side, but typically when you get this type of liquidation, the selling is not done yet. Usually there are still trapped buyers in the market who need to unwind their positions, and one day is simply not enough for all of that to happen. So usually when you get this type of day that clearly takes out multiple weeks of balancing, it's going to take more time for those positions to unravel. And that's why over the next couple of days at least, anytime the market bounces back up into resistance, that can prove to be a good shorting opportunity if you're flat, which as day traders we are. But to the group that is still stuck holding longs, they are going to see that as an opportunity to exit their long position and limit their losses. And that dynamic of buyers exiting on bounces and sellers piling in on bounces is what creates that supply-demand dynamic where bounces end up being very good shorting opportunities, because you have multiple participants or multiple time frame participants looking to sell now. So that's how it looks to be shaping up at the moment. Now, again, as we push down into support, we are at or near some pretty decent support. So, buyers can step in there too. And that's why I'm saying that we don't want to go crazy on the short side. We want to wait for those retracements, and those can be good opportunities to short. But, you don't want to short it in the hole after it's moved, 100 points into support. Especially as a day trader, that doesn't really make a whole lot of sense. But any bounces back up into resistance or, broken support that can act as resistance, those can be pretty good. So for example, this bounce over here, even though it's in the closing range, it's very textbook that sellers were stepping in here. And, this area, the 37, roughly 56, up to maybe even like 65 or so, on the larger time frame, this can still be pretty good resistance in the event of a bounce back up. The 37.40 to 50 can also act as resistance, but this is going to be just better. And then above that we have today's VPOC right around 37.79 or so. That's going to be a good area of resistance. It also coincides with the midpoint of the day here. And then beyond that, the broken initial support here, can be resistance. You can expand that up to include the 3794 HVN over here. So that can be good resistance as well. And then, of course, beyond that, we can use 3803 to 3809 as the next area of resistance. If we look at the daily chart, you can just get an idea of just how overdone this market is and what the larger retracements look like by just measuring swing high to swing low. And, you can see here that, if we pop back up to 37, that 3756 to 66 area, I mean, that's just a 38% retracement. It would not be a, major deal to do something like that. Now, if the market is very weak, then ideally we hold below 3740 to 50. That would be better for sellers. If we can hold below 3740 to 50, that would be a very good thing for the sell side. It would tell us that the market is very much in a bearish phase. It's kind of like how off the open, holding below pre-market resistance told us something about the market. It told us that we were in a very bearish and weak state. Well, now holding below 3740 to 50 would tell us that on a slightly larger time frame. So similar principle, just different time frame. So this is going to be something we keep an eye on. And then on the downside, we can see that the next kind of major swing low and swing high and breakout area, I mean, that you're looking at kind of the mid 3660s as far as larger time frame support goes. That's not to say that buyers can't be active at some of the zones ahead of that. We could get that as well, but it's just that the major swing low happens to be down here at the 3651 to 56 area. So right now, that's the expectation as far as the market goes heading into overnight. So we're going to go ahead and wrap it up over here. Thank you for attending. I mean, it's it's a good time to be an active intraday trader. A lot of opportunity, but there's also a little bit more risk now because of this big structural change. So just be on the lookout for fear of missing out. Manage your FOMO. Because in this type of environment, that is the riskier emotion that you have to watch out for. When you get this big of a drop and this big of a move, it's very natural to think, what you could have done, what you should have done, and it's very natural to try to make up for any missed opportunity today, the next day, right? So don't do that. Going into tomorrow, it should be a mental reset, and just be mindful of the fear of missing out because, there can be some decent bounces in this environment too. So that's why I'm saying, we're going to be looking to short every bounce, as long as we're not seeing any unusually strong upward momentum, we're going to be looking to short bounces. But don't get so caught up in the recent movement that you start taking trades at, terrible location. So manage that fear of missing out, be prepared for it. So as you go into the day tomorrow, get a piece of paper and write FOMO on it and put it on your desk as a reminder that this is probably going to be the trap tomorrow, is going to be FOMO. And if it's in front of you, if you're prepared for it, you're aware of it, you're mindful of it, then hopefully you don't fall into that trap. All right, guys, that's a wrap for today. Thanks again. Enjoy the rest of your evening. And as always, we will catch up again bright and early tomorrow morning.